I want, and we want a safe environment to be able to bring to our clients crypto.
Hi, everyone. Welcome to the Twin Shores Financial Biweekly Market Update, where we share what we're seeing in the traditional and digital markets. I'm Alex Kaminer, the host, here with Tim Nihill, our founder and CEO, and Alex Krieger, our digital markets analyst. Today, we're going to be talking about potential rate hikes going up, a new fintech AI platform that just got launched on Tuesday, and a lot of fun stuff happening in the crypto industry with the SEC suing both Coinbase and Binance. If you enjoy the content, please like, share, subscribe, and comment any questions you might have down below. Tim, why don't you start us off?
Awesome. Hello, everyone. Welcome to our bi-weekly update on, June 6th today?
June 6th.
Awesome. So, yeah, traditional markets are plodding along as they are, pretty much flat, a little bit up, a little bit down, not a lot of activity there. So it's, I would say, all quiet on the Western front for now. A lot of interesting things are happening behind the scenes, which I think are going to set us up for, the runs that we've been expecting in, commodities starting at the end of 2023 and going into 2024. I think a lot of the stuff, crypto is a hot topic today, but especially for things like Bitcoin, I think we're gonna start to see come fall into 2024 the transitions that we've been talking about. And I think the biggest thing is looking at really what's going on from an overall global perspective than just what's going on from an at-home perspective. So we've talked ad nauseum for the past 2 years about the Federal Reserve. Probably can expect another rate hike or two going into the summer. But we're going to start to really see as the U.S. Treasury fills its checkbook, which is absolutely hilarious, giving the government more money as we've seen what they've done with it so far. We're going to start to see the Treasury fill its checkbook again. We're going to see the effects of quantitative tightening. And I would say if you wanted to read the tea leaves with what's behind the scenes come September, October, November, where you're going to see the effects of the rate hikes that have happened. Right? Because usually it takes 12 months to see the effect of the rate hike. We've already seen our first drop, which, we really haven't gotten into the heart of the effects of QT. So as we continue to raise the debt ceiling in the United States, we tie that to QT, which we've never seen before. I think getting into the fall is really where you're going to start seeing everything that's behind the scenes coming to the forefront. And I would not be in the market right now at all. I wouldn't be in bonds. I wouldn't be in stocks unless you're really picking and choosing your spots. So that will be very interesting to see how that all plays out. OPEC came out and cut more oil supply, so we're seeing a little bounce in oil. As you'll see on one of our podcasts, we're coming out in the next 2 weeks, 3 weeks, maybe 4, whenever we put it out there with our friends from U.S. Energy. We just see a really, really positive cycle for oil and natural gas starting in the fall, going into 2024. So we're going to start seeing that play out. And then behind the scenes, we're seeing massive, massive, massive amounts of physical gold being scooped up on a tremendous level. So, through the summer, maybe a little bit quiet, but I think come fall, as a repeat of what happened September 17th of 2019 when the shadow banking system collapsed. For those that are out there, the shadow banking system is all the behind-the-scenes stuff that Wall Street and banks get away with using all of our money, really, and none of it is on the books and none of it is fully disclosed. But if you Google shadow banking system September 17, 2019, you see the Federal Reserve had to inject a tremendous amount of liquidity in the system because it basically broke. We're going to look to repeat that cycle again here in 2023. What that means to stocks, bonds, and equities will remain to be seen, but I think it's a real, real smart idea to get very, very, very defensive. Not that we're giving investment advice.
I got a question for you, Tim, just based on what you were saying. I was under the impression that our government was pretty much done with rate hikes for a little while, maybe one more going into the summer that we had said a few months ago, but I'm surprised that you think that there's going to be a few more now.
Yeah, I'm seeing a lot of conversation on maybe another hike or two.
Interesting.
It'll be very interesting. Where this one is lining up to maybe be like something we've never seen before. But it will be,
That's always fun.
if you look at the cycle of money that we talk about, especially when you have a currency that the world depends on, that's used as the primary medium of exchange. At the end of the cycle of that currency's dominance, you get a period of inflation, you get a period of deflation, and then you get massive hyperinflation. Prices are not really going down. They'll get on TV and say, oh, look, they went down, blah, 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 since in the past 6 months. It's like, well, let's go back to 2018 and 2019, right? When I was paying $1.75, $1.80 for gas. I'm still paying $3.50, $3.60.
Right.
So prices have not gone down, and inflation is sticky. If you wanted to really fix inflation, you would have to break the American financial system, and that's going to be catastrophic for everyone across the world. And on top of that, you have to pay attention to what's going on with the Bank of Japan. You have to pay attention with, if you're really into this and want to know what's happening, you have to pay attention to the movement of U.S. treasuries across the world. You have to look at central banks and how they're dumping the US dollar as their currency reserve. And this gets to that whole de-dollarization deal, because there's two trends going on with the dollar. Not to get too into the weeds, but we're seeing de-dollarization by a lot of major banks and countries across the world. But at the same time, we're seeing dollar adoption by countries like Zimbabwe, that currencies have absolutely gone to trash. That's a very interesting cycle, but I think the real core of the problem with the dollar is you have to look at dollar weaponization. And when you do your homework on dollar weaponization, you're going to see why the US dollar and its dominance is really going to come to an end.
We talked about the dollar weaponization a little while ago. We were mentioning how we basically weaponized the dollar against Russia and China. And is that basically what you were talking about?
Yes, and then the dollar's becoming a weapon against American citizens now.
Correct. And when you say too, I would say you brought up Zimbabwe and other African nations. They are being forced to use a CBDC and they're getting rid of all their cash. Wouldn't you say that's an exodus, that those citizens don't want to use the CBDC and are flocking to cash?
Don't know yet.
Definitely, what I'm reading.
Yeah, they're definitely going to have the same issue, right? If you don't want to use your country's cash, what would make you want to use your country's electronic cash? So that's where I think you're seeing dollar picking up. The problem is everyone in America is like, oh, we need a strong dollar. And it's the furthest from the truth.
Correct.
Because a strong dollar helps if you live overseas, but a strong dollar at home is a death wish. We need a weak dollar at home, and we need other things to have higher value, right? That's my kind of thesis on it. Like, it's the only way that we can continue the system we have without completely breaking it. And I mean, yes, we could get a very, very strong dollar, but if you wanted to get to the inflation targets at 2 to 3%, you're going to have to break the markets. And you're going to have to break housing. You're going to have to break stocks. You're going to have to break bonds. And I mean, think of the pain point on that one. It'll be interesting to see how all this plays out, especially with the Treasury and the debt ceiling and the kicking in the can there. But I don't think a strong dollar does Americans any good. It does for purchasing goods and services, but all in all, if our currency is devaluing at 12% year over year anyways, that's great if I'm living in Portugal, but it's not so great if I'm here at home.
Slightly shifting topics away from the traditional markets a little bit. I wanted to discuss this interesting article that I had read recently where this company, LTX, came out with this bond GPT, which is to help traders find more liquid bonds at a better price. Now, AI has been used in the financial industry for a very long time, not a very long time, but for a long time with algorithms and everything. What do you think makes this a little different? Is this because it's specifically in relation to the bond market, or?
I think that bond GBT in AI is very, very interesting. From what I've seen, I don't really think it changes anything. But
I got
what it does is it's bringing the realization that computers are running finance and have been for a long time. And it's bringing it to everybody in retail and maybe not just institutional finance. But I think transactions and trades and the frequency of trades are going to happen faster than they ever have before. I think the access and transparency of information is only going to increase. From there, I think people think information transparency reduces volatility. It doesn't. So I think in all markets, we're going to have higher highs and lower lows. And if you look at the tokenization of things, by 2030, the financial asset tokenization market is going to be $16 trillion. And I don't know how big we are now, but I think we're not even $1 trillion.
crypto in general.
No,
Are you saying?
tokenization of assets.
Correct, but you're saying
I don't know that I include crypto in there. I don't include Bitcoin. I don't include Ethereum. I think it's more looking at the transition and transformation of the stock and bond market. The bond market, I think this is part of a massive bond market transformation.
who's going to buy the bonds is my curiosity after what happened in the past 3 years, right? COVID hits, all these banks, smaller banks buy all these treasuries and bonds cheap at low interest rates and then get screwed. What makes you think it can't happen again? I would like, I don't know. I'd just stay away from
Can't
it.
somebody make the same argument with cryptocurrency, though?
I mean, the people that are buying the bonds are investors.
But they're in control. Like at least Bitcoin isn't controlled by one entity.
Yeah,
The bonds are controlled by the government, and the government screwed their own banks over.
yeah, but that's treasury bonds, right? You're not talking about municipalities. You're not talking about high yields. You're not talking about corporates, and you're not talking privates. So you have to separate out like the government market stuff from the private sector, private investment. But if you're buying ETFs, you own all this stuff. That's really who buys it. You buy an ETF and you get your bonds and you get your equities through those exposures. And really right now with the way the system is set up, the buyers of all this stuff are really 401ks. So everyone has money taken out of their paycheck. It gets put into an index target date fund or a basket of mutual funds. And it's basically the retirement system funding the whole thing. And then if you look at the advisory side of things, although we've pretty much stayed away from them, because I think this is a very, very, when I think of investing, what you do to really be a successful investor, from my observation and my experience, is you pick your spots and then let them do what they're supposed to do. I think people are getting too caught up in being able to trade and be tactical. I just think the treasury trade is something I would stay far, far away from. But the problem is, if you look at the financial system and a lot of advisory firms and financial advisors, a lot of the money markets they're using and ETFs are using, they're basically buying all the treasuries right now. So it seems like we're fully funding our own government, especially if China and Japan, the biggest buyers of treasuries, are sending them home. You're like, well, who's buying them? It's like, well, we are.
Correct. Our pensions and our 401ks and all that. And then what happens when it goes bust?
I mean, they're going to kick the can as long as they can. But from what I'm seeing is the window's now to under 36 months.
That's crazy too, because generationally, right? You keep kicking it down the road. the younger generations are having less and less kids, so there's going to be no one to keep up with the workforce to pay for it all.
It is interesting, but that's why I just the whole game is set up, right? It's playing Monopoly. It's that's the game. It's not playing this market game. So if you're out there, you're in real assets, tangible assets, cash flow producing instruments that you can reinvest that are out of the market, and then you could take your shots in the market because it's essentially one big casino. That's how you play it.
Well, shifting a little bit over again to the crypto markets, Alex, we've got some big news coming out of the crypto industry. Why don't you share that with us now?
Binance yesterday was Binance and Coinbase both are sued for civil suits, which is, Tim, it's common, right? Civil suits happen all the time with the SEC and the Federal Trade Commission, the FTC, right? Banks and everything. It happens all the time. They'll probably settle, and that's why you had the major dip yesterday or over Sunday and today is due to that, is my opinion. Just FUD, trying to stir up the pot, right? See how low they can get Bitcoin, which is pretty amazing that it held up all the way to 25. It barely, you know what I mean? Barely dipped.
It was up today.
Yeah. Oh, it's up today about 4% right now. We're back up to above where we fell yesterday.
Right.
So like I said, it's going to be volatile over the summer. You're just going to see a ping pong in this range between 35, 40,000 down to 15, maybe 12, right? It's just going to be accumulation phase till I think third quarter to the fall. And that's when things will start to get interesting.
I find the Binance thing interesting. I think we have known that Binance was going to be pulled in at some point in time, right?
Correct.
I mean, they had to be top at the list when the SEC was looking at, platforms and all that stuff.
Well, then why allow them to accept them and register 2 or 3 years ago, right? Binance US. Like, I don't. And then reading stuff with Coinbase and how they're talking, they let the IPO go through. All these coins that they've talked about and are saying are securities have been on the platform for years, right? They're not new coins like PayPay or Shiba Inu or anything. You know what I mean? They're not meme coins. They're actual real life use case tokens. Majority of those.
Well, here's what I find interesting. So if you go to the SEC's register, the Federal Register, 17 CFR 240, it's release number 34-90788, and it's the custody of digital asset security by special purpose broker-dealers, right?
Mm-hmm.
Effective date is April 27, 2021. The crux of it is, if you go, it's 17 pages, you go on here and you say, okay, blah, 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 the commission's position, which expires 5 years from the publication of this date, which is essentially 2026, in circumstances set in Section 4, which is very much in line with how everybody operates within the financial structure today in custodying assets. If you adhere to Section 4, you will not be subject to the commission enforcement action on the basis that a broker-dealer deems itself to obtain and maintain physical possession or control of customer fully paid excess margin digital assets for purposes of, blah, 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 Rule 15C 3-3. Broker-dealers are subject to examination with FINRA, and the commission staff has the opportunity to review, but it's basically to give the financial industry the opportunity to figure crypto out, right?
Correct.
Right. And it says the paragraph after, the 5-year period in the statement is effect designed to provide market participants with the opportunity to develop practices and processes to develop and demonstrate possession and control over digital assets. So when I look at it and I think about it, because a lot of the stuff that we do, it's our own private, right? It's private, it's our own personal money, whatever, but we're playing in the space to kind of figure out how it works, because it's going to be part of our lives very, very soon. And if you don't believe so, you could just Google India and the UPI system, and that will tell you everything you need to know. But I find it very interesting that Coinbase and Binance are not covered by that. It's very interesting that Coinbase was allowed to go public and then get sued after going public, right? Because the SEC has to approve the IPO.
Right.
And I think it's very interesting. Like when I looked at and heard from, Gary Gensler stuff today, he's not wrong in the fact that you have to adhere to custody rules. You're not supposed to custody clients' assets and commingle them with your own. And then if, when you're in the investment business, and then on top of that, you can't front run trades. Although Morgan Stanley and Goldman Sachs have gotten nailed with that. So we do know it happens. So I find it very, very interesting that this is playing out the way it's playing out. And when I listened to the stuff this morning, I actually see it as a very, very good thing for the crypto industry. Because you're probably going to tie Coinbase and Binance up in litigation. And then you're going to see the rollout of crypto by the custodial platforms in the US that have been doing this for 100 years. So if you look behind the scenes, we already know that Fidelity's developed their own blockchain trading system, right? Because these institutions need to give their clients the ability to access crypto in a safe manner and also allow their trade desk to be able to do the same thing. Schwab is building their own platform to trade crypto. Bank New York Mellon and the Pershing system, they're all developing their own blockchain to be able to trade crypto. So when I saw what's happening today, I'm like, it wouldn't surprise me in the next, where are we in June, early 2024, where you start to see Schwab and TD Ameritrade and Fidelity and Citi and even JP Morgan and Bank New York Mellon all start to offer crypto directly in brokerage and retirement accounts on their systems. And what they're doing is they're just getting rid of the bad apples. So when I saw it today, I see this as a very, very positive thing. But I think we talk about it all the time. You got to get rid of these shit coins.
And they'll start to consolidate, though.
They will.
This is the consolidation of shit coins.
Right.
But what's the difference between the US dollar, the dollar, and Pepe? They're both shit coins.
Yeah, you can take that stance as much as you want, but you're still.
I believe this is the way I see it. I think it's an implement of a new choke point on crypto in the United States to roll out the CBDC next month, which happens through the Fed. It's to control your whole economic freedom, right? We have agencies that are unelected officials creating laws and rules to control us and the economic agency.
We shall see.
I don't know.
I think we're at the point where, think of it this way. How many people are in the U.S.? 331 million?
Something around there.
Okay, so there's 8 billion total?
Yep, a little bit more.
A little less.
This is
more than 8 billion.
My point of view, or everything depends on obviously where you stand, but my observation on this one is the U.S. is about to be the PGA in the Live Tour.
Oh, combining finally?
Yeah, you have 7.7 billion people across the world that are quite frankly sick of the U.S. system. So it's absolutely impossible to control 8 billion people. Can't do it. And 8 billion people are at the point in time where they're not going to have it anymore. So I see this as more of a great unwinding. But there are definitely things that have to play out there. Like they're not wrong. Like the state of the crypto markets, the crypto people forgot one thing. You never took it and delivered it to the end user and the day-to-day person. They missed the final step. So if you want massive adoption, the crypto markets are just not in a position to do it.
No, because they keep suing us and lock you in litigation and nothing gets done. Look at what with the XRP and the SEC. It's been going on since 2018. So for 5 years, they've been in a lawsuit and going through it.
Yeah. Well, I think it's just going to be a matter of letting this one play out. From, you know, I think it starts to play out in 6 months, 6 to 9. But is crypto here? Absolutely. Is tokenization of assets here? Absolutely. Artificial intelligence, you have a massive, massive change that's happening. And if you let it roll out all at the same time, you'd probably freak out a lot of people. How are you supposed to take someone who's 80 years old that's been sitting in a bank for 60 years talking to their local teller and say, oh, by the way, all your money's electronic now? That's a massive leap. So I don't think it's one or the other. I think we all make the mistake of being zealots, especially because we've been educated in a school system that teach you that someone's smarter than the other just because they get a better grade. I've always found that the smartest person in the room is never the one with the best grades. And I think it's going to be a combination of public and private that gets everything to where it needs to go. Right. And it's like we talked about, and they're talking about now, energy is not just electric. It's got to be hydro. It's got to be nuclear. It's a combination of everything. And we just got to get out of the mentality that there's one solution to everything, because there's just not. But is the FTC wrong? And we're on board with this. Yes, we want a safe environment to be able to bring to our clients crypto. We want regulation. We'll do the KYC. We'll do books and records. We're okay with that. It's part of our normal business. But, at some point, we need the SEC to help us out. To be like, all right, you know what? Here's the platform to do it on. Here's the way to do it. Still do the same stuff you're doing. And we're cool with that. Because if we can get that, and we can get that safety behind the scenes to prevent some of the things that are going on, I don't see that as a bad thing. What do you think? I think we're still pretty bullish on crypto.
Yeah, I'm bullish. Like I said, you're gonna see it's gonna be very volatile. So just have cash on the sidelines. Be ready to buy it. It's going to be in a range between 40 and 15,000. You're going to see it like everything that we're back up to 27 already.
That's a small range.
It's small, right? It'll be 15 to 40, Yeah.
But that's what I mean. Look, it dumped $3,000 yesterday, right?
Yeah.
It's volatile. Like that's why the range is so big. Like in one day it can dump $5,000, 10%, right?
Right.
And then it just gets all bought back up. It's funny how that works.
People should just be sitting in front of their computers, watching the charts for every second. And when it goes down by 1,000, you buy. When it goes up by 500, you sell. That's just the way you got to do it.
Right. No,
you don't have to sit in front of it, though. You could put orders in and walk away.
Being extremely sarcastic, but
this whole thing seems like a massive macro play, and you just have to be in your spots and let it go.
Right. Well, on behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed and want to keep up to date on the markets, please tune in every other Thursday for all your financial information. Please don't forget to like, share, and subscribe. And if you have any questions, please put them down in the comment section down below. Tim, Alex, any last words?
Not your keys, not your coins.
That's what the SEC said today.
What, not your keys, not your coins?
Pretty much.
No? Well, get them off exchanges.
As always, do your homework, invest wisely.